What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, what a day. What a day. What a stressful week it's been with the markets all over the place. Volatility spiking, the Dow dropping, all kinds of craziness, creating all types of increased stress across the board. Here's the good news, guys. We're going to make it through to the other side of this. It's all good. During periods like this, though, you have well, maybe not everybody, but certainly those of us involved in the market, especially those of us who, have to make sense of it every day. There's so much you're trying to cram in such a short period of time, and so many different angles you're trying to game out so quickly to make sense of the situation and not lead people astray and genuinely, try to help people out. I mean, that's what this business is all about. So don't think that we're, these mechanical Wall Street predators. They got them out there, of course, but when you're talking about your friendly neighborhood, Zach's editor, that's not the case. I obviously want everybody to make money because then you guys keep coming back to Zach's. I mean, that's my only incentive, is to try and help you guys out, help you make sense of the situation. There is no other incentive, right? I'm not trading against you guys. We're not betting against you guys. We're not getting, there's not even management fees here. We're just genuinely trying to help you out, trying to guide you through these tough periods and make sure you don't make emotional decisions that are just rash. And with that, I am going to give a little bit of, we're going to do one of Dave's anecdotes. First off, what's up, Kurt? I'm glad that you got your wife to take care of the kid going to the dentist. Ron, how are you doing? Joanna, hello. How are you? Tracy, hello. Good, Dr. Paul. And the Manda known as Panda, Patrick Anderson, the Great. Okay, so story time before we get into this. And I want you to know I got candles going right now, and I'm listening to Drew Hill on my Pandora. That's right, folks. I am mellowing out. I'm mellowing myself out. Okay, so this isn't going to work. So this is what I'm going to have to do, folks. Hang on. Hold, please. We're going to have to bust out our free stock charts because at least they'll give us big-time historical perspective. So I'm going to do this and get this thing going. Even though it crashes, we're just going to use this for this long-term chart that I want to put up here before I get into anything else. So we're going to pull up the S&P 500, okay? So a long time ago in a galaxy far, far away, your boy had clients that he had to take care of. And I distinctly remember, we can leave the monthlies up. It was the summer of 2008, okay? So let me scoot this over so we can see it. Sorry. Okay. So it was summer of 2008. The market had just taken a real nasty tumble, actually. So it was actually closer to the fall. And because I remember the Dow was under 1,000. I mean, the S&P 500 rather was under 1,000, right? I think it was, honestly, I think it got down to like 890 that day, okay? And I'm on the phone. I'm driving home from my job, and I was on the phone with someone who was 47 years old, and I had one of her IRAs. I think it was a rollover 401k that we had, and obviously it had taken a little bit of a tumble. Now, we weren't allocated very aggressively in this either. It wasn't 100% equities. I want to say it was like a 75. It wasn't even 75. I think it was 50-50. It's basically a 50-50 split. And the market had gone down. It was crashing pretty good, under 900 on the S&P 500. And she was telling me that when I get back in that next morning, she wanted me to liquidate everything and put the money into an IRA CD. And I just begged for 45 minutes on my drive home. Like, please reconsider. Like, yes, this is terrible, and everything looks bad, and it looks like we're going to zero, right? But that's not going to happen. The market's not going to zero. Things are going to bounce back. It's going to get better. Yes, this is like the worst recession that we've seen since the Great Depression, and yes, it's real scary, and the headlines were terrible. Being an advisor in the bank at that time was absolute just terror. It was like being in a morgue every day. It was a weird time. Anyway, so I'm begging and begging and begging, and inevitably falls on deaf ears. Forced liquidation, and there you go. And now here we are, 3 times as much as we were in that late summer of 2008. Okay, now why am I bringing this up? Because as nasty as things look here, and as quick as the market has come down, this is nothing, okay? Yes, it feels terrible, right? And it looks terrible on the chart. It's just, whoa. But have we forgotten these times not that long ago where you had moves that percentage-wise were just as much, if not more, than what we're seeing over the last few days? Yes, it was dramatic, these huge spikes down. But remember, when you're coming into this, I suppose I could have gone to 2009 here. I didn't realize we went back that far. That's okay. Anyway, when you have these nasty dips, and they happen, right? They happen all the time. When you're going through it today, yeah, 2009 felt way worse. When you're going through things like this over the last few days here, you got to ask yourself, fundamentally, what does this market look like moving forward? Yes, we can make all the arguments about where the S&P, where the valuations are and all of this. Of course, absolutely valuations are stretched, no question. Obviously, a lot less stretched than they were just a few short days ago, right? And you see these huge spikes in volatility and everybody freaks out. But you got to recognize when there's a mechanical process that's taking place in the market versus any sort of fundamental shift. I don't feel a fundamental shift in the market right now. But I certainly am seeing mechanical processes that are taking place that are chopping some of the stuff out. What do I mean specifically? We're talking about the VIX, right? Oops, not VJIX. I don't know what happened there, but look, the VIX. This was the most crowded trade. Shorting the VIX was one of the most crowded trades ever. But I would like to point to previous spikes up in the VIX. Look at this. August 24th, 2015. The VIX gets up to 53.29 intraday. And ultimately what happens? It comes down. So there's these forced liquidations that take place, or the forced buying that might take place when we're talking about this like XIV ETF, the inverse VIX ETF, that's essentially blown up, and now all of that stuff has to get unwound. Those are mechanical processes that are taking place that have to happen. This isn't a systemic risk to the market. Remember what the VIX measures. It's basically implied volatility of the S&P 500 options, the index options. So what happens when you get a spike in the VIX, like we did the other day, right? People get nervous. All of a sudden, these algos start buying up these options. VIX spikes again, and then now we've caused this event where this XIV is upside down, it's imploded, and then all of that has to get bought too. That's all working itself out. And if you look at the VIX over the case of today, look at this. Look at these moves. Well, this was yesterday's close, right? No, this is... Here we go. Just go one day. There we go. Five days? One day? All right. So here we go. So lots of wild kind of back and forth gyration, but if you notice, it's kind of getting a little bit smaller here, a little bit smaller here, a little bit smaller, a little bit smaller. Starting to coil up again here, right around 35 on this VIX. I wouldn't be surprised if the VIX closed at 35 today, right? Just relax, I guess is what I'm coming down. VIX, yes, it's going up, but remember, spot VIX is a measure of that implied volatility in the S&P 500 options. So when you come from a period of time where we had very little volatility and now all of a sudden everybody's freaking out all at once, this is what happens, okay? So lots of fear, lots of uncertainty, huge gyrations in the market. Now, I don't know what your favorite store is, or anyone's favorite store here, but I like going to Nike, the Nike factory outlet, right? That's what I like doing. If the Nike factory outlet had a 30% off sale today, I would stop this video, hop in the car, drive on over to Nike factory outlet, and go buy some stuff, right? That's what I would do. Now, Nike stock is down what? Let's look at Nike stock over the last several days. Nike stock has gone from 68.83 all the way down here to 62.09. Nike stock's on sale. I want to buy some Nike stock. Insert your favorite company here, because if you liked it last week, you should love it this week. And this is why I use the Zacks rank, right? I use the Zacks rank because I know stocks that are in the good graces of the Zacks rank have earnings behind them. We say it again and again. Every single time I do this video, I say the same thing, right? I say earnings trends take a long time to develop. Price trends reverse on a dime. So one of the easiest ways to use the Zacks rank to make money is to look for stocks that have earnings trends that are remaining intact while they sell off. That's perfect. You're still getting the earnings story, but now it's on sale. You should be excited that this market has turned down. I don't know what most of your time frames are, but for me, I have a longer term time frame. And if you have that longer term time frame, you should be excited about the market ticking down, and you should have no trepidation about buying when you get these dips. And I'm not talking about being a binary sort of trader. What I mean by that is somebody who deploys all of their capital at once and then pulls out all of their capital at once. I don't know too many people that trade like that, nor should you. I'm talking about investing for the long run. You get a few extra bucks out of your paycheck, you find something on sale, and you buy it. And you keep buying it unless the underlying earnings story has changed and it looks like that stock is going to go in the toilet. Then you sell it. Rinse and repeat. That's what you do. That's how you build up wealth over the long run. And that's what we're talking about here. Okay? I know we get caught up in these short-term trading mechanisms, and they're a lot of fun, and there's a bunch of opportunity. But over the long run, if there's a stock that you like and it's on sale on a day like today, buy it. I bought in Surprise Trader. I bought in Momentum Trader yesterday. I did it again today. I bought in Surprise Trader and I bought in Momentum Trader. If I still had Home Run, I would have bought in Home Run. If this was Blockchain Innovators, it was already loaded, ready to go, I would have bought in Blockchain Innovators. If you just close your nose and buy it, right? Close your nose and buy. Okay, there's my intro rants. Now let's get down to the task at hand, and that's Tesla. Always to start things here. But Pando, you are good. See, you just got to do it. You're going to be better, though. Think about it. So I was talking to Pando. Obviously, Pando and I talk a lot, given the fact that we work together. And I just talk to Pando a lot. I mean, what can I say? But investing for the long term, right? And Pando's really good at finding these companies, like electronics companies that are doing well, because that's a passion of his. He likes electronics. He likes video games. He likes this whole world. So he has an insight into what is doing better and what can evolve over time. And what I had a bunch of nerd friends of mine that put me on NVIDIA 2-3 years ago. And that's why I bought NVIDIA. Not because I'm some clairvoyant, right? I'm not. Have people do actual analysis and you buy what you know. It's the Peter Lynch philosophy. I'm getting so many new people asking me, hey Dave, how do I get invested in the stock market? What should I do? And obviously you guys are not newbies, right? So, but on occasion we do get some newbies in here. You buy what you know, and that's what that means. Is you look at, in your everyday life, what do you use? Who's the biggest performer in that? Look at their stock. If the trend is strong, boom, that's what you do. So me, I'm a little bit of a gearhead, my friends. I don't know if you knew that. I'm sure you did. I'm always talking about cars. So one car company we're talking about today is Tesla, the most controversial car company there is. Why? Because they're not really a car company. That's right, folks. I said it. Tesla is not a car company. Just wait. Just wait. It's an entire infrastructure play. We've got to get out of our U.S.-centric mindset here where we don't see a lot of electric cars on the streets here, and we think that, oh, nobody's going to use this. That's couldn't be further from the truth. Globally, companies are investing billions of dollars. Actually, just yesterday, I think Porsche announced they're throwing another $6 billion at electric cars. They're pulling out all the stops on their Mission E, which, make no mistake about it, is a Tesla Model S killer. That's true. But look, it's automotive business. There's competition all over. You could say that the M5 from BMW and the E63 AMG from Mercedes are meant to kill each other. Of course they're meant to kill each other. But that doesn't mean they do. They don't, because there's so much market share out there for everybody. Okay. Tesla. Infrastructure company, not a car company. So don't compare Tesla's PE to GM's PE. Well, you wouldn't, right? Because they're negative. You can get upset about the cash burn. You can totally do that. I get it. Some very famous cases of people being upset about the cash burn. Bob Lutz among them, longtime executive in the field, basically saying that this is, what is this? It's a ripoff. Who else? Wozniak, Steve Wozniak from Apple came out and says he doesn't believe anything that Elon Musk says. That's actually a compliment from one salesman to the other, I suppose. But let's look at why so many people are so conflicted about Tesla shares. First is this price consensus and EPS surprise chart, which basically this is the mark of just not caring. What do we like to see in these price consensus and EPS surprise charts? Black line corresponds to the right y-axis. The multicolored lines represent the evolution of our Zacks consensus estimates and correspond to the left y-axis. Green arrows are earnings beats. Red arrows are earnings misses. We like to see this, right? Estimates going up and growth along with the share price. This is overpromise, underdeliver. Year in, year out, constant, okay? Constant. Year in and year out, okay? Now, why are people still dealing with this? Well, because the bulls in Tesla are the ones who see it as an infrastructure company. The bears in Tesla are the ones who see it as a car company. And honestly, they're both right. Because we don't know what's going to come of Tesla over the course of the next several years. The Model 3 is the single most important car in the history of, obviously, Tesla, in the short history of Tesla. Probably the most important car of the 21st century, where the Model T was the 20th century. Model 3. Will he be able to deliver an inexpensive, everyday man's or everyday woman's electric car that people are going to buy and use and drive around in and love? And remains to be seen, right? But here's the thing, the whole supercharger network. Somebody has to develop that. So now you got to think, what if Mobil or Shell sold a car? and sold a popular car that people like to drive that was fuel efficient, but that you could only fill up at Shell stations. And Shell just happened to have a bunch of stations all over the place. And it was kind of like all encompassing, right? Then you'd look at that company a little bit differently. That's what Tesla wants you to look at their company as an infrastructure play, not just a car company. Still remains to be seen if there's ever going to be any sort of profitability on this, okay? As of right now, it's rough. It's rough right now. Can they just flip the switch and all of a sudden get back to these $4 or $5 more, 10? I mean, let's face it, at a $350 stock price, you're going to have to make $10, $15 a share, $20 a share. I mean, it's got to be up there, right? We'll see what happens when this Model 3 really starts rolling. So there's the price consensus and EPS surprise chart on Tesla. What are we gleaning from this? Nothing. Absolutely nothing, other than the fact that Elon Musk overpromises and underdelivers, and Steve Wozniak does not believe anything that Elon Musk has to say. So there's that. Sorry, I'm throwing pens over here. I'm so excited. Detailed estimates page here on Zacks.com. Looky here. It is the Zacks rank number 4 sell. I could have told you that just by looking at this. When you overpromise and underdeliver, and these estimates are constantly going down, it's going to make it a sell. That's not a surprise. And actually, I think I can see here. I think this is the chart. I hope I didn't screw this up by clicking on this. Let's see what happens. There should be a chart that shows me Zacks rank over time, and it does. See, should come into no surprise that it's very rare that Tesla is ever a buy in our system. Most of the time, it's a sell because of that overpromise and underdeliver. We don't like that. We don't. We don't like the overpromise, underdeliver. In the eyes of the Zacks rank. It's not a good look for you. Style scores F for value, F for growth, D for momentum. I mean, look at it's not the domestic auto industry, so that's just silliness. After the bell tomorrow is when they're going to report. Actually got a positive ESP. Look, Mom, I'm only going to lose $8.80 this year. Next year, I'm only going to lose $3.98. It's absurd in terms of making money or losing money. But here's the point. Revenues, right? So here's something we can hang our hats on a little bit. Are you going to have some revenue growth? And again, these projections, you start looking out end of this year, that's when they want to be selling these Model 3s next year. Remember, we got the Tesla Semi. A lot of companies will sign up for that Tesla Semi. Don't act like Daimler doesn't have one, though. Huge growth. 44.39% revenue growth for the current quarter. Next quarter looks like 52.88. Next year, 60%. So when you're looking at this and you go, why on earth is anybody paying this much money for Tesla? Oh, there it is. That's why. This is investing for the long term, if you believe. But at a certain point, it's got to get scary, right? EPS, we might as well just ball this up in a ball and throw it into the garbage. Does it matter if we're negative 300% or negative 63%? We've already come to the conclusion that nobody cares about how much money Tesla's making, right? I mean, who is holding Elon Musk accountable for Tesla earnings right now? Nobody. Not the shareholders. No one. The haters are. But they don't get it yet. They don't get it yet. Will they ever get it? I don't know. And then again, oh, so we lost 880. We're only going to lose 398 next year. That's crazy talk. It's a cult stock. We know this. Are you part of the cult or not? I don't know. Over the course of the last 60 days, you got 6 analysts that have dropped those estimates for the current quarter. 4 over the last 30 days. Current year, 5 and 3. Next year, 4 and 3, all to the downside. But if you look at the upside, there are 3 analysts that have increased that estimate for next year, 2 for the current year, just 1 for the current quarter. So does it matter if Tesla loses 308 or if it loses 319 this quarter? A wider than expected loss, I think, will get punished. Absolutely. But I don't think we're going to rejoice if Tesla is like, oh, we only lost $3. I don't think that's going to happen. Upside. Let's not even worry about that. Look at the last surprise. So we've got disappointment last time. Pretty handy disappointment. And we'll see in the next section what the actual impact of these disappointments is. If anybody really cares when they get disappointed by Tesla or not. Now, they've already started doing some reviews on the Model 3. A lot of the guys have been, just saying it's the greatest thing since sliced bread. There have been other people out there who have been more critical. Only time will tell. So as users get their Teslas and start driving them around, how do they hold up? I think they're going to hold up just fine. People are going to like them. Again, it's a cult product. Has a cult following. Think of Apple. How many people buy those new Apple iPhones every time they come out? They love the whole ecosystem around it. With Tesla, that's what's up. There's a whole infrastructure behind it. You got a supercharging network. You've got your Model 3. If you're down here in Florida, you might have their solar roof tiles. Putting power into your power wall and charging your car. That's the future of mobility that Tesla wants you to believe. But don't think that Tesla's the only company out there talking about the future of mobility. BMW Auto Group talking about they want to be a car connectivity, a consumer connectivity company or whatever. Toyota just talking about how they're making their whole shift towards mobility. They don't want to be an auto company. They want to be a mobility company, a consumer mobility company. Things are changing big time in the auto industry. Things are becoming more and more high-tech. Tesla, I think, really spearheaded that, although I'm sure somebody will argue with me about that, but I think that was really the start. Okay. Let's dig in here. Forget about that. I want to go back to this revenue. And let's get a little further. Let's see if I can get 10 years of this madness. So the revenue growth has been pretty dramatic. So you can't take that away from him. The guy is growing revenues. And I guess the thought process is if you're growing revenues at 60%, then 40%, and you're really getting these, I mean, these numbers are getting big. When it comes down to it, he's going to make $4 billion more in revenues than he did last year. That's a big number. Big number. They just launched a car off into space. I don't know if you saw that. SpaceX launching his Elon's Roadster, the 4th electric car that he ever made. They're launching it into space. Now, obviously, PE valuation is worthless. So let's look at price to sales here on Tesla. Who is surprised by this number? Because I am. I'm surprised that it's only 5.18. So while everybody has been griping about valuation, Tesla has slowly increased those valuations, or made that valuation look better, right? Increased sales, dropping this price to sales. Now, I'm going to have to do the obvious. Give you some perspective. Now, autos traditionally shouldn't be trading at 5 times sales. Here's Ford at 26 bips, 0.26%. General Motors, 0.34. Fiat Chrysler, 0.27. So relative to the other automakers, Tesla looks crazy from a price to sales perspective. But the growth numbers on Fiat Chrysler versus the revenue growth numbers for Tesla are dramatic. So there is that. But still, 5 times sales. Even if you look at these refiners, still at a multiple of that. You know, I was making the argument of, oh, it's a whole infrastructure play, and So anyway, this feels like an exercise in futility. Like, why are we even looking at valuations in any shape or form around Tesla? Well, because you know that these are factors that the Tesla bulls can point to. And they're going, well, the price of sales is coming down. Yes, coming down. It's still dramatically, well, significantly above where the rest of the market is. I wonder if I can pull up the sub-industry. Of course I can. And this 0.64 is skewed because Tesla's part of it. Most of them are probably close to 30, 0.30, I would bet. And Tesla is just tugging the average up. So, valuations don't matter. They don't care. They're not driving the stock. It's hopes, it's dreams, it's aspirations. Look at my consolidated surprise. Here we can see what Tesla has done over the last few earnings reports here. And what do we got? Well, we got a real stinker last time. So that was a wider than expected loss on actually decent revenues, and they killed it. But the quarter before that, it's a wider expected loss, wider than expected, and it went up 8%. Probably because the revenues were significantly higher, right? 10% revenue surprise almost, 9.4% revenue surprise, that was enough. And then the quarter before, they get crushed. Came in at a $1.97 loss versus expectations for a 67-cent loss. Lost 7%. Quarter before that, same thing, right? Disappointing. Stock goes down. Then there have been a couple quarters where it didn't do much. Just a little sideways action. Let's go back before this, see what we got. And look at some, basically a lot of these moves have been to the negative side. A couple of really good ones sprinkled in there. Even on a wider than expected loss, though. You see that? So, if only Ryan McQueenie was here so I could show off what he was telling me about. There's nice little surprises. Non-financial metrics here for Tesla. Let's see what sort of non-financial metrics we might have here. This will give some perspective when you're listening to these calls. You know, what was good. So we do have total automotive revenue. I was hoping that this would include unit sales. A little disappointed here, guys. Well, so there goes that. But energy and storage versus automotive revenue. So that was absolutely useless. So sorry, guys. I didn't prep that earlier today, so I was taken by surprise, as were you. Okay. Now that this market is coming back south again, I think we got some decent action here, some decent fibs we can carve out. Do I want to use that? Why not? Although I feel like this is better. I like that better. Okay. I could draw another I could probably draw a fib from here to here and give you some targets, and I bet you that's an extension target and all this. But I'm just gonna play from this low to this high here. Oh, I could put price alerts on here and all sorts of stuff. Okay, let's see. There we go. I think that looks better. All right. What's jumping out at me? First of all, we're the death cross people. Here's the 50 going under the 200 day, which oftentimes is just marks the end of a move versus the beginning of something at a downside. But the 50-day essentially where the stock's at now. 200-day getting close. This 50 and this 200-day are really starting to get in cahoots with each other. Got this fib here, just under $300. A series of higher lows kind of being carved in here. So there's that. Let me get rid of this VWAP and get a little commodity channel index action. Oversold here, below the zero line. Doesn't spend too much time below that zero line, right? Before it recovers, typically. So it's nearly reached an extreme where it's likely to bounce. If this were, in fact, just a regular day, we didn't have this major event risk coming, I'd say it was going to bounce right around here. But with this huge event risk that we have present, I think that that would be thrown out the window, and that 290, what low is this? 290, oh my goodness, what's happening? Sorry, my phone's making noise at me. I don't know what's going on. 295. 295, what's this? 292. So that's pretty much what I'm looking at. 292 to the downside. 360 is the first pretty firm top there. So I bet you this market's going to be pricing in a $30 move on Tesla. Let's see. So again, they're after the bell tomorrow. So got the rest of the trading day today to kind of look at the craziness happening in the markets and decide if it's something you want to mess around with ahead of time. But I'm going to give you some key levels to watch out for after their earnings report, because I know there's plenty of you that wisely choose to just wait until after the earnings report, let it come to a level, and then adjust your trade accordingly or enter a trade accordingly. $329. So we're going to look at the 330. Oh, wow. They're not quite. I'm surprised to see this, actually. Given that the VIX is where it is. Okay. So, at the money calls are 10.45 by 11.15. So we're going to call that 10.80. The at the money puts are 11.35 by 11.80. We're going to call that 11.57. I hate it when I do that. Boy, do I hate it when I do that. Okay, there we go. So you're looking for about a $22 move out of Tesla. That's actually surprising. I thought it was going to be a little bit more. 6.7%. I'm honestly, I'm a little bit surprised that that number is what it is. I would expect it a little bit more. Now, I will go back and look at, actually, you know what, why don't we just do this? Forget about that front week. We're just going to go out here. And I want to look at some credit spread ideas, folks. What's going on here? I'm not loading up. Come on. Let's go. Load it up. Oh, that's why. Stacked. I need the stacked view. Okay. There we go. So I was looking out by those 360s being toppy. Whereas the rest of the market's only saying 22 bucks. Is that what it's saying? So that puts us up at 350. So if you look at the market, options market expecting just a $22 move. If you sold out of the money there by 22 bucks, 558 is what you would get for that 350 call. Simultaneously buying the 350, 250 to limit your risk. You're going to give back $4.98 of that. So in this case, 60 cents is the net credit. Difference in the strike price is $2.50 minus that 60 cents. That means you have $1.90 at risk on a 60-cent credit, or you can make 31.5% on this. And all you need is shares of Tesla to close at or below $3.50 at expiration. I'm going to say that's a decent bear credit idea. Short the Feb 16th, 350, 352, 50 call spread for 60-cent net credit. Just for giggles, what I want to do, what if I went out just a little bit further and then push that call spread out past that 360 level where we've seen that top. So in this case, selling that 360, this is the March 9th expiration, which happens to be the anniversary of the market low and the day that Biggie Smalls died. 708 is what you're going to get for selling the 360 call. Simultaneously buying the 362.50 is 655. So here your net credit is 53 cents. 7 cents shy, but you got to wait a lot longer, but it's a lower risk, okay? So I'm going to say a more conservative bear credit, more conservative than the previous bear credit, right? So we're going to call that 2-star risk. Short the March 9th. I think it was March 9th. Let me just clarify this was in fact March 9th. Yeah, March 9th. March 9th, 360, 362, 50 call spread for a 53-cent net credit. More conservative. It's going to take longer, right? But that puts it just outside of that spike. I like it. On the flip side, I'm going to stay inside of this expiration and do the same thing like I was talking about with those 295s. We saw that that's really a short-term floor for the stock, and I'm expecting something similar. 295, you're going to get 663 for selling that 295 put, simultaneously buying the 290 to cover your downside risk. It's going to cost you 555. So here you got 108 as a net credit, but remember, difference in the strike prices here is a lot bigger. It's $5 minus that 108. That means 392 is what you stand to lose, and you're only going to get a 108 credit. So that's 27.5%. You got to put up $400, and you got to wait a really long time. Not too many of you guys are going to find that appealing, I can already tell. But consider coupling that with the other side of this, right? Putting on a condor using the 290, 295, and that call spread. So here's more conservative bull credit, short the March 9th, 295, 290 put spread for a 108. Was 108? Yeah, net credit. I would say consider the condor, because I think it could, the stock very well could move a little bit more than what the market is pricing, but I'm going to do this. I'm going to say the official trade that pays is the 295, 290, 360, 360, 50 condor. And here on my net credit calculation, since the difference in this 360, 362, 50 is 53 cents, I'm just going to pretend like I did that twice. You guys see that? Just to balance everything out. So that would be 106 coming in there, 108 coming in there. That would be a 214 net credit. Okay? it would be a 214 net credit, and the max loss in that case would be 500 minus that 214. Max loss 286. You get the max gain if shares of Tesla stay between 295 and 360 at expiration. That's what I'm thinking the trade that pays is. Now, for the rest of us, looking for shorter term ideas, right? You got to be careful buying lottos and stuff like that here on Tesla because it's so expensive, because the stock is so expensive, right? But you got to think that a one-off event, something crazy, good, pushes it to new highs. And then something bad pushes it well beyond that 295 area. So I think a decent strategy here also. Wait to see what happens tomorrow. If Tesla gaps down here, then depending on the report, I think I'd be selling puts out of the money after the report. If it rallies up, see how it acts with that 360 level and do the same thing. Just the opposite, selling calls. This is after the report. So that's kind of a post strategy. Pre-strategy, I want to put the squeeze on it. I think these are two decent levels to try and put the squeeze on this thing here. So there you go. That's my Tesla strategy. I think it's good. I think it's solid. What do you think, guys? Guys and gals, it's been real quiet today. Are you just in awe? Or is everybody distracted by the rest of the market? I think it's more people are distracted by the rest of the market. No one's in awe. This has been such an exciting day. I'm glad I'm not trading futures today, because as awesome as this looks in the rearview mirror, I would have found a way to get destroyed today. I would have. I know it. I know myself. I saw this coming down. I was like, oh, yeah, that's going to rebound, right? But if I did that in real life and practice, I would have been destroyed. I talked about these levels in our chat, so that was good. Nice little bounce. Everybody wants to look at MCHP. Microchip Tech. What's up with MCHP? Why do you guys like it? What is this all of a sudden? Oh, it's sold off, and let's see. It's got earnings after the bell today, huh? Is that what it is? Why has this thing, what is with this? Why did this gap? What's going on here? Just wasn't ready? Wasn't ready to be a $100 stock? Support at the 200 day, that's not bad. 200 days just under the current price. Dumping, maybe selling some put spreads out of the money. Is that what you guys are looking at? Do you like the stock over the long term? What's its exact rank? MCHP. Let's look at it. Yeah, guys, that's another thing. Don't worry. Don't worry about sitting on the sidelines for a little bit. There's nothing wrong with sitting on the sidelines waiting until you're a little bit more comfortable, right? Don't just go batting your head against the wall and trading just for the sake of trading. You end up over trading. You end up making silly mistakes. You don't like it? Get out. iPhone worries. Oh, yeah, one of those. Well, I mean, how worried are they, though, Kurt? Look at this. Does this look like a worried stock to you? This doesn't look like a worried stock to you. Does not look like a worried stock. Again, price trends reverse. Price trends reverse on a dime. Earnings trends take a long time to develop. This is a positive earnings trend. Again, I haven't read a single research report on these guys recently, so that's all about as good of an insight as I'm going to be able to give you. I don't have more for you other than I think I'd be comfortable selling puts out of the money here. Put spread underneath the 200 day. Seems pretty solid. All right, everybody. Things are starting to look up a little bit. Let's see what happens. I got a half-hour chart on here now. So this market's going to test these highs now. What do you think? You think it blows through them? Next alert you're going to have on your screen is 2680. Whoa, wait. I forgot about this guy. So 2661. I think that's not much, though. I don't think anything's going to happen there. 2666. I think that gets blown through, too. And then 2680. 2680. We'll see what happens there. Folks, I think you should be buying here. That's why I bought earlier in the day. And it's not just because Tajesh was so bearish. It's because I don't know, it just feels different. Feels like we were right about this mechanical situation with the VIX. I think like neon lights, we're gonna be all right. Okay. I think the worst is behind us. That's all I got for you guys. Here we go. I spent 50 minutes doing this, but that's okay because I did some rants. I did some ranting. It was fun. So I want to thank you all so much for hanging out with us here. Again, we're in the chat room. It was a healthy chat earlier in the day. I've got to get out of there, though, because I got stuff to do. But that has been going across the bottom of the screen. That discuss or Discord, whatever, type it in. Somebody type this thing in for me. Oh, you're welcome, Ted. Look, it gave me the janky bardzo. That's right. That's Polish, my friends. Thank you very much. It was odd seeing the correction, but it's not that odd. It's not that odd. It was fierce. Surprised it was as fierce as it was. But I think so. It's you don't have to go. I don't think you have to go that far out, Dr. Paul. I think you just go a couple of weeks. If you did a put spread, I think you're going to be okay. I think this is all going to settle down. But remember, that huge supplier of selling in this market is not there anymore. Remember, with these short volatility guys not in there anymore, there's a supply of sellers that is not in the market. So you got to be careful. The VIX is going to be screwy here over the next few weeks. You got to be careful on UVXY also before I get out of here. Just one more. You got to be careful because there is backwardation. I mean, you never get this in the VIX, right? Typically, it's the other way around. There's more of a chance of stuff hitting the fan later on than there is now. We've got the opposite effect happening right now. This is called backwardation. When the front maturities are priced higher than the further out maturities. This is when UVXY has really big contango. This is working against UVXY, right? The contango works against UVXY. Now we have backwardation. This is actually helping UVXY every day right now. Why is this helping? Remember, UVXY is a weighted average of 30-day volatility. How do you get to 30 days when you have a February contract and a March contract? Every single day, you're going to sell the February contract and you're going to buy the March contract. So you got a -1 and you got a +1 that's happening every single day. So what's happening now when there's backwardation in the market, they're selling their UVXY contract at 25.85. I mean their VIX contract, and then they're buying that March contract for 21.40. They're buying high, they're selling low. That's helping UVXY here, and it helps times 2. When you have the regular contango in the market and it looks like that, this number is positive and it's working in the face of UVXY. It's not doing that yet. So if you want to mess around with this, mess around just with the VIX. You can trade the options on the VIX, I think, is the way to go with this if you still want to come in and sell this. I also want to point out, we've been talking about this volatility. We do this correct. I don't mean that we're going to be right every single time that we do this, but what I mean is we do this correct. We limit our risk by using options. So when you're hearing about these guys that are getting destroyed selling volatility, that was not you because you didn't take that bait, right? Even on Friday, we talked about UVXY, and I was like, yeah, I'd be looking at a put spread here. I'm going to buy this one. I'm going to sell this one. I defined my risk, even though I was wrong, right? 14.12, and UVXY is at what, 25? I was wrong. But I lost $1, okay? Use options, clearly define your risk, and then it doesn't matter what you're trading. You could trade the riskiest thing on earth. Define your risk. And with that, I'm going to get off of my soapbox. I'm going to make some lunch, and I'm going to try to fix Cranky Dave. So thanks so much for hanging out with me here today on Zach's Live Trader. I will see you all mañana for NVIDIA. Have a good one, folks.